Hi traders, Mandy here from High Performance Trading. We've all heard the phrases, nobody ever went broke taking a profit, but we've also heard, let your winners run. Like, what is it? Especially with the recent volatility, it's been quite a hard decision to make. Now, it reminds me of the TV show Deal or No Deal. I hope you have it in your country as well. And if not, just Google it. So just imagine you have already $45,000 banked. And the highest case is the $100,000 is still in play. And now you're faced with a decision. Do I take the risk and continue playing and risk that in the next round, I'm going to kick out the $100,000 and then I lose my profits as well? And I'm being left with a bitter feeling of missing out? Or do I play it safe and I take my money, even though the $100,000 is still in play? And then the next round, all the small cases are being kicked out. And in my case that I chose was the $100,000 profit. And now I'm being left with a bitter feeling of, again, having missed out on the $100,000. Now, that's a really tricky decision that we as traders also face, right? We are faced with similar financial decision makings. And that's why I love watching Deal or No Deal and see how these people make their financial decisions. And it's always really interesting. So when they want to justify risking the win and going for another round of cases, the story they're telling themselves is, you know what? I came here with nothing. And if I leave with nothing, I haven't really lost anything. And so that's how they make themselves feel better when they choose to go for the next round, potentially risking the profits that they already have made. And let's say the next case they're choosing is the $100,000. So their profits go down to, I don't know, $10,000 or even nothing. Then you can see the disappointment written in their faces and what they told themselves beforehand about, I leave with nothing. It's not nothing that didn't have before. They feel that they have missed out on $40,000. And it's the same with traders, right? So what it looks like in trading is that traders say, I'm going to move my stop loss into break even. So essentially it's a risk-free trade, right? And so that's how they rationalize losing the profits, that it can't hurt. But again, afterwards, I get those emails saying, oh no, I'm so stupid. Why did I not take my profits? Ah, it hurts so bad. And so here's an example I want to share with you. One of my traders, amazing trader, but yeah, he was faced with a very difficult decision, right? So the decision was, he was long Soxel. I mean, amazing entry, right? My favorite, I call it slingshot entry. And he was in a really good profit. $75,000, 500, and then the trade retraced, and it was really late. He's an Australian-based trader, and he thought, okay, it retraced 50%. Now it has to go take out the high, and maybe go another $2. So he thought, I can make another, $10,000, $20,000 on this trade, and he put it into break even because his thought was, if it retraces again, and he puts his trade at his stop loss at 50%. Then his stop loss gets triggered, the trade goes without him to his profit target, and then turns around, and he would be left being disappointed and in pain the next day, right? Because I asked him, like, dude, why did you move your stop loss to break even and not bank at least part of the profits? Because that's the privilege that we have as traders. It's not like Deal or No Deal where everything's just black and white, you win or you lose, right? We have a certain level of influence. And also, if you think about it, if you had paid a certain wage, you wouldn't give it back either, right? Would you? Like, that's how you want to look at the trade. But what most traders do is they view it as house money. And there's a beautiful story. You can Google it on the internet as well. It's called The Man in the Green Bathrobe. And it's explaining the behavioral bias of mental accounting. So the story goes that it's newlyweds. They're going to Las Vegas. They're in the casinos. She is tired, of course, wife is tired, man goes gambling. And so he takes $100, turns it into $1 million gambling, and then gives it all back. He goes home, but he keeps his $100 that he originally started playing with. And wife says, "So, darling, did you lose anything?" He says, "No, I didn't lose anything." And that's mental accounting, right? The question is, did he really not lose anything because he had $1 million pocketed? Or did he lose $1 million? Like, how do we think about this? And that's exactly what traders do. They're viewed as the house money. But we want to look at it differently. And there's also the saying where we say, you only have the money that you pocketed, that you banked, that is your money. If it is open profit, it's not that it's not yet your money. But when it comes to risk management and thinking about where do I put my stop loss, I think differently. I'm like, I already have this money in my pocket. Why would I give everything away? And at least I put my stop loss at 50% or a trailing stop at least, right? So we have to give something that's, the way to maximize your profits, but you don't want to give back everything. So the question is, how do we think about it differently? Because you can imagine this guy, yes, he still made $1,000 roughly, but it felt like he gave back $75,000, and that's a lot of money. Now, how do we want to think about it differently? We want to think about assessing the probabilities of the trade as of now, not as it was when we entered the trade, but as it is now. And ask yourself, if I wasn't already in this trade, would I take it now? And then Tom Dante's evolving R concept. Am I willing to risk 90R, the profits that I've already made, to make another 10R? Now, let me explain the evolving R concept. And if you go to Tom's Twitter account at Trader Dante, he talks about it quite a lot. I love Tom, so I think he's just really amazing. So Tom says the risk reward ratio changes as price moves. Makes sense, right? If you think about it. You start off, you have a 10-point stop loss and a 100-point profit target. So your risk reward is 10R. Now the trade has moved so much. It's 10 points to target, 90 points open profit. Now your evolving R has reduced to 0.11. And when you're emotional, you don't think about these things. So you really want to train yourself, even if you're emotional. You're like, I don't want to miss out on any more profits. I want to, bank it all. I wanted to go to my profit target. That you train yourself to also think logically, because there's, two types of people. Like there's the head people and there's the heart people. And we in Germany we actually call them the head people and the belly people, or because we make gut decisions when we are in when we make decisions based on emotional values. So the heart people who make decisions based on emotions, they are the ones who fall into this trap like my trader did. The head people, they're like super rational, even though they might have the emotion they don't want to miss out, but they don't care. Like they're focused on the rational thinking. And that's what you want to learn from those guys. Like be a hard person, be a kind person when it comes to dealing with other people. When it comes to your trades, like be hardcore, rational head person, okay? Prefrontal cortex. Now, the mistake, as I said, that these traders made, because that happened actually a lot during the volatility. I got so many emails and worked with so many traders who had exactly the same problem, that that their trades go back into the break even because they were waiting for the breakout, but the breakout didn't come. The market came, was moving sideways, and the breakout actually came today. So now that I talk about the evolving the market has again changed. And as Linda Rushke says, the moment you find the lock, the market changes the keys. So I hope you find this useful. Remember, there is no such thing as a risk-free trade. And also remember, my theme is always, every successful trader has had a dark past. And I learned that when I read Linda Rushke's book, Trading Sardines, where she talks about in the first 6 months, she had a $50,000 loss, which in the 1980s was a lot of money. And then she went on, became one of the most successful traders in the world. And that's why I believe every losing trader can also have a bright future. You also can become successful wherever you are, whatever your next level of success is. So I hope you find this useful. And I hope that you have an amazing trading day and Don't give up. Keep working on your trading. There is so much opportunity out there. Trading is still the best job in the world. Thank you very much for watching my videos and for all the nice and kind feedback. I um, wish you a great day. Peace out. Also, peace out.